Welcome to RANsquawk's EU morning briefing for Friday 21st of August of 2009. Take a quick check around the markets, just gone 9:30 now in London. Firstly, starting off with the Asian session, did see a dip in the global index futures at around 4 AM London time overnight in the early hours, and did also cause a bid into fixed income, all on the back of, again, China pretty much leading the markets at the moment in terms of the Asian session. There was some speculation overnight that China plans to tighten capital requirements for banks, threatening to curb record lending in the country, according to people familiar with the matter. Again, could impede a global economic recovery if China does cut back severely, and that was felt across the markets. The yen also strengthened. However, into the European Open, we did see a slight pareback in the moves, which was further buoyed by what we've already seen, the French, German and Eurozone manufacturing and service PMIs coming in on the composite basis at 15-month highs, causing a sharp bid into equity index futures, moving back into positive territory now for the cash markets at around 0.25% for the FTSE, CAC and DAX after that lower open, which did see the Nikkei close down around 1.4%. Elsewhere then, Bund futures are now in negative territory after their higher open, with the strength in equities, and not much else scheduled in economic data. No major 130s from the US. It'll be 3 o'clock when we'll see the US existing home sales report for July. And we'll also have much of the expectation will be on the US Central Bank Chief Ben Bernanke. He'll deliver his reflections of a year of the crisis at the Kansas City Fed's Economic Symposium at Jackson Hole. Again, 3 o'clock London time, that kicks off. He gives the opening remarks. However, most analysts expect to be more of a rear view discussion rather than anything new that we'll see from Benjamin Bernanke today. Elsewhere, just in terms of some other notable news worth coming out of Asia, worth noting that China's GDP will grow around 8.5% in Q3 from a year earlier, picking up from the Q2's 7.9% according to the State Information Centre. The IMF also said they may raise their forecast for global economic rebound as signs of growth return, according to Deputy General Lepsky. And elsewhere, as a further update, the popular US government Cash for Clunkers programme, it was revealed by the Transportation Department overnight that will end on August 24th, which is Monday.